Hello, everybody, and welcome to another Daily Plan. I'm your boss, Joe Boss, and this is a nice week ahead edition. By the way, I got a little friend here. Yes, hello. I got a desk cat at the moment. Yes, hello. Hello, kitty cat. Come to enjoy the weekend with me. Hello, Harold. Hello, Denise. And man, oh man. We've had a nice move up here in the euro dollar. We got news that the Greens, might be making a agreement with the CDU and SPD on the debt brake amendment. Coming on the 18th of March, I believe. Which is the same day we're going to be getting the FOMC rate decision. Hello, Ari. Hello, Big. Hello. Yes. And we got a friend here on stream too, yes. The good girl. Yes. If she starts getting loud, I'll go ahead and put her outside the room, but so far, no problem. Okay, and based on the volume levels, I should turn this down just a hair more. That should be good. What do you guys think? Oh man. It's gonna be an interesting day, especially with the talk. I've seen so many people do the same trade you took yesterday, Denise. Oh, I think I accidentally, brought the volume a tad too high there. Anyways, a lot of people, including myself, are still short Eurodollar, but some guys were smart by, let me make sure I have the Epic Pen turned on. Where is that Epic Pen? Oh, it's turning on. I wanted to mark up a couple of spots here on the chart. There we go. I got the Epic Pen back. Alrighty. So we have a lot of people taking shorts up in this area on the euro dollar. Some people got out yesterday around this area. I saw you did that during the stream yesterday, Denise. And yeah, some people also got out here yesterday in the trading group, which I was incredibly impressed to see, right? Now, you guys know my expectation. I don't think that they're going to be getting this debt brake stuff passed. However, it seems like, based on rumors this morning, around inside political circles, it was released in the German news today that the Greens might be making an agreement with the SPD and the CDU on debt brake. They're asking for $50 billion more be sent to their... Oh, yes? Is it time to leave the room now? Yes, I think it's time. Well, that didn't last too long. Give me a sec. She's like, oh, you're not gonna play with me, you're just gonna talk? Okay, then I want to get out of here. Very playful cat. Anyways, I still have my reservations about the news report, simply because I have more issue trusting news reports nowadays on this sort of stuff. If you recall, during the streams back in January, when, during Trump's first week in office, in the week before he got into office, all these news agencies saying, oh, Trump is going to gradually put on tariffs, right? He's going to have we're going to have less tariffs than we initially expect. And then he comes on with the 25% tariffs, and, if they retaliate, we'll do our own retaliatory tariffs, right? So Trump comes in hard and strong, and all these news articles that move the price against the US dollar immediately get reversed, and it creates all this extra volatility in the markets that's not necessary. And I feel like I don't want to get trapped in the same trap with German news, because don't get me wrong, there is an article that says that the Greens in Germany are going to be forming an agreement effectively sometime right now. If I check Financial Juice, let's see if there's any news on Financial Juice. Let's see here. German conservatives, MERS. I expect vote to do these constitutional amendment on Tuesday. That's right. Let's see here. MERS says Germany is back. So we have some comments from MERS here. Let me just real quick check out what's going on here. All right, let's look at it together. Let's see, what did MERS say, right? German debt deal to exempt defense spending from debt break above 1%, but includes expanded definition of defense spending, says a source. Let's see here. Working on planned call between Trump and Prime Minister in the next couple of days. Oh, between Trump and Carney. That'll be interesting to see how that works out. Let's see here. Discussions are challenging. The result is acceptable for all. CDU-SPD Greens reached a deal on fiscal package, says MERS. Okay, so it is going on. It is happening. MERS did confirm it. Thank God. It's not just random hubbub. Okay. Now that MERS has actually confirmed it and said, okay, you know, we have a deal here. Now the question is the deal going to be good, right? Is this going to be a good deal here? Climate Transformation Fund will get 100 billion from the 500 billion euro fund. Okay. Yeah, instead of the 50 billion they were originally going to get. The special fund of 500 billion over 12 years will be, it's over 12 years will be created, of which 100 billion will be spent by states. Again, that's my main objection to a lot of this stimulus, is that it's over literally a decade of spending. It's not, in the grand scheme of things, it's not that much spending. Scholz is actually still saying we are ready to free $3 billion for Ukraine when the package passes. Ew. Let's see here. Yeah, I was able to get a better entry. Cool. Well, given this information, it might be time to hop out of these trades here. It might just be time to hop out of the euro-dollar short, because once that debt package passes, there's going to be all sorts of expectations of European growth. All sorts of expectations. So let's continue on with setting expectations for the week ahead. We have FOMC next week. They're expected to stay on hold. That is on the same day that the debt break is going to occur. Then we have the Bank of England, SNB, and BoJ. Speaking of the BoE, right, Bank of England, if we go and check out Great British Pound, it's not doing so hot at the moment. I had more bullish expectations, but you know what? We had growth data come out here. If we go to today, check that out. UK GDP came out lower than forecast and really way below the prior. So with growth slowing down in the UK, I would not think that we're going to see any sort of healthy development in the yield spreads. Yeah. You can see the yield spreads are going more negative. Net, they are positive over the last month. But if we look at these drawings, we've probably hit a top here. Also, when the spring statement comes out here on the 26th of March, we're probably going to be getting, and I believe, right, we're going to be seeing more taxes get put on, right? We're going to be seeing higher taxes. Remember all those taxes from the autumn budget? Apparently, some of those taxes that were promised to be removed and cut and not put on during the autumn budget are getting put on here during the spring budget. It'll definitely be something that we research, and I am definitely going to be researching over the weekend in the trading group, right? The one here over in the Discord. And access to the Discord, of course, is free. All the research stuff that we do in the Discord is free. It's just the trading group that's paid, and that's how you get access to all these indicators as well. Let's see here. Are we getting any positive news out of the Canadian side other than that the Canadians want to work more with Europe, the UK, and have a phone call with Trump? Because if that's the case, why do we see USD CAD rising right now? Or rather, the Canadian side strengthening at the moment. The yield spreads short term are still going pretty well. Let's turn up that music just a tad. There we go. Good music. So yeah, short-term yield spreads are quite positive. We'll see if that runs into the... You know what? Here's what I'll do. I'll put a cap. No, that doesn't quite work. Sorry about the music juggling, but what I need to do is I need to get a proper multimedia volume mixer for the streams instead of doing this, because having to constantly readjust the stuff, the audio, and remixing it every stream and on a song per song basis is kind of nutty. So I'll look over the weekend for a volume mixer that I can use. There are plenty available. Hopefully there's one that's particularly easy to set up. Let's see here. UK GDP can get even worse. Oh yeah, especially on the Great British Pound, USD. Yeah, especially after the spring statement. Yeah. Rumor is next budget, the new chancellor will raid cash savings by reducing the tax-free ISA wrapper. I don't know the specifics on that, Harold, but I would definitely want more information, which will ultimately be the goal of the research done over the weekend. So if you want to contribute to that, I absolutely would appreciate it, because it's information that I'm going to be looking for. Okay. We also have SNB next week, so let's go ahead and check out the Swiss franc. I believe that's dollar Swissy. Yep. And that's probably the low for the month. Again, the SNB is expected to hold going into their next meeting. I believe, if I recall correctly, it's on the 20th, right? Let's see here. Economic calendar. Go to next week. And BoJ, that's the 18th. Cool. Where is... Oh, do they not have SNB in here? Is Switzerland not in here? Yeah, Switzerland's in here. So I don't understand. TradingView's calendar really needs an upgrade. I don't know, maybe I could be misremembering the date. I could be misremembering the date. That's always a possibility. SNB annual report, forecasts. Yeah. Yeah, SNB's on the 20th. Balance of trade. Okay, there's the interest rate decision. Yeah. So they don't label the SNB decision as a 3-bar here. They don't label it as incredibly important. That's kind of sad. Especially considering I explicitly put it in my calendar. So when I do this, I kind of want to see a central bank decision. You know, it's kind of important for that country. So I would continue to expect more upside here. Because we are expecting a cut, if I'm remembering correctly. We are expecting a 25 basis point cut. Now the SNB, they don't want to go negative, but considering now that Trump has said we are looking at China and Japan as examples of currency manipulators, it looks like the finance ministry in Switzerland, right, the finance department over there, they don't necessarily want to just begin printing tons of money to weaken their currency. So they're going to look at the SNB and say, you know, you might need to more seriously be open to the consideration of negative interest rates if going and printing money to intervene in the FX markets. If we can't make a deal with the US, the Swiss, they do a lot of business with the US. The Swiss do a lot of business, so they definitely do not want to get tariffed. So, you know, maybe they'll work out a deal with Trump so they don't get tariffed massively. Or they'll go ahead and give the green light for negative interest rates. We'll see. Or hopefully, this would be even better. Their economy improves in a way where they don't have to do the stimulus. We'll see. We'll see how the Swiss economy moves going forward. And then we have good old BoJ. I believe they're expected to stay on hold at this next meeting, if I recall. Yield spreads are on the positive side at the moment. I believe this is, if we look at probability pivots, yeah, this is a likely low. You can see we are at the probability weighted pivot low for the month on the yen. Let's check it out for the week ahead. Go ahead and load. Okay, so pretty low odds of a continuation trade. A lot of lows down here, so I wouldn't be surprised to see us test the low of last week again on the dollar yen. And then on the high side, which is all I did, I just switched the probability data source from low data to high data, and now we are getting information about where the top usually comes in next week. And I'd say the upside is pretty capped until you get past this R1 pivot, which I just set an alert for. If you hit Alt A on TradingView, it brings up the alert panel. Oh, it didn't do it that time. I guess it's still lagging trying to create my alert. That's kind of weird. It sucks when TradingView lags. Anyways, 45% of the time, the top for next week seasonally comes in between R0.5 and R1. very, very, very nice to see. A very tall peak here for next week. And you can probably see why I say going past R1, you have a bit more uncertainty, right? You have smaller probabilities and a lot of these zeros, a lot of these gaps. Whenever you see a zero here on this indicator, it just means that never in probably the last 21, 22 years of data we have for dollar yen going into specifically the next week. Oh, there we go. Cool. See what I mean by TradingView lagging? All right. Oh, sorry about the alert being really loud. That was really loud on my end. Let's see here. Crossed central pivot. Oh, okay, so these are old alerts. No, these are alerts that just happened now. Huh. So these alerts are a bit delayed at the moment. I wonder why I'm receiving these alerts about a minute and a half too late. That's weird. That is weird, weird, weird. TradingView is not having, it's having a very slow day today, isn't it? Anyhow, I'm pretty sure you guys get the point. The expectation for next week is going to be along these lines. That is, unless you cross R1 and then it's a big old fat question mark as to where you go, how high up. Hopefully that clears that up. Let's go ahead and draw these expectations. So a bit of a continuation into early next week. Let's call it into Tuesday, 5/03/14, right? 14 is the date. Yes, it is. I know what day it is. All right. And we can set, instead of an expectation of how low we're going to go, and the reason why I'm more hesitant on setting an expectation, drawing one of these arrows for how low we end up going, because we could end up going down here or down here. Don't get me wrong, it's a lot easier to go down here, so we could set that as the expectation for how low we go. At least the nominal expectation. We can definitely do that. Oh wow, a lot of closes down here. A lot of closes that skew pretty far down here. Yeah. Also some closes that look more like this. So in this type of scenario where the low for next week on dollar yen comes in around here, I would be expecting more of a bounce, right? Because if the low comes in here, the close has to come in above the low, so reasonably the next highest probability for a close above this spot where the low is right there. However, see all these closes down here? That means the low would have to come in below or near that close, so something like this. So that'd be pretty bad, right? And given the more hawkish policy at the Bank of Japan, I'm not totally sold on this. Unless we get some new information that reduces rate hike expectations at the Bank of Japan from 2 to 1 expected rate hike this year, I wouldn't expect this kind of move at all. Or we get some kind of massive tariff move against Japan, which I'm honestly not expecting either. So I think a more reasonable expectation to set would be something more or less along these lines here. And using Tuesday as this pivot due to the FOMC coming out, saying, hey, we're going to stay on hold. And then this pivot over here, right, March 20th, when the BoJ comes out and says, yeah, we're going to stay on hold. And just to confirm, the BoJ is on the 20th, right? Well, that's actually inflation. So inflation year over year, BoJ is here on the 18th. Oh, FOMC is on the 19th. Gotcha. So we could end up seeing something that's more like this. Probably something on the more conservative side. Yeah, a more conservative drop. So maybe we reach this low, maybe we don't. And especially if inflation in Japan jumps higher here around the 20th, I'd expect a stronger bounce into the close of the week. See how easy it is to set expectations when you have good charting tools and good analysis from, hey, here are the expectations I have based on what I know about these central banks and these economic events and the expectations around those things, right? And then I have a couple of tools. These aren't the, most quantitative tools in the world. They're just good enough, right? Now let's go ahead, use some range probabilities for the week ahead, kind of refine our expectations a tad. So maybe here, maybe a little further down there. Using our closing odds. Oh, look, right where we have our drawing at the moment is right where we have the peak in our probability distribution. This 4%. And yeah, pretty much this area right here is where we could expect to close. So we'll go ahead and leave that as is and see how that turns out for us next week. See how accurate this expectation is. Oh wow, yeah. Delete that message. Sorry about that, guys, in the chat. Yeah, Kick has a lot of spammers. Yeah. Very, very, very sad to see. Very sad to see. Let's go ahead and ban that guy. And then if I go to community or let's see here. Banned words. I'm just gonna ban the word Discord in the Kick chat. They're gonna have to come up with more inventive names other than Discord if you want to actually talk about Discord. That might be a bit overkill, but you know what? Until I can find a more surgical way of dealing with spam on Kick with that kind of stuff, I'll just use a cleaver. Bum bum ba bum bum ba bum bum ba bum. Yeah, hopefully you guys have been enjoying the stream so far. For everyone here on WAP, thank you for watching on Kick and Twitch, of course. Also, thank you guys too. Most people are watching over on YouTube where they can watch the stream in 1440p. So, if you've been watching, again, most of the guys who are watching right now are guys who are repeat offenders, right? They like to come in here and check out these expectations over time. Just remember to like and sub and all that good stuff. We'll get into the next chart. How about right about now? Now would also be a good time to leave recommendations for chart analysis on the week ahead. Oh, I'm getting new prints here. Trump says that there's a good chance the Ukraine war can come to an end. Oh, he just posted something new on Truth Social. Okay. Yep, 1 minute ago. And the US passed its budget, it looks like. Yes. Yep. So Chuck Schumer The Democrats are helping Trump pass the continuing resolution, it seems. So we're not going to have a government shutdown in the US. We have a very good and productive discussion with President Vladimir Putin of Russia yesterday. And there's a very good chance that this horrible, bloody war can finally come to an end. But at this very moment, thousands of Ukrainian troops are completely surrounded by the Russian military and in a very bad and vulnerable position. I have strongly requested President Putin that their lives be spared. This would be a horrible massacre, not one seen since World War II. God bless them all. All right. So hopefully things continue moving in at least a positive direction with Trump and Putin. That's the least we can hope for. Well, we can really hope for peace, right? That's what we really want. Oh, I believe I still have... Yep. Yeah, absolutely. Basically, reducing the wrapper will cause Brits to hoard less cash. Yeah. So it'll raise inflation, but also the price of stuff is increased a lot. So if you force spending and reduce saving and have inflation super high, you're just putting people into the poorhouse at that point. You're punishing them for saving in a scenario when they really need to be saving. But I guess the UK really loves to have higher inflation at the moment. These are going to set really high inflation expectations going forward. And with the slow growth, the negative growth here, that's, so many people have already told me it's pretty much stagflation. It's arguably more recessionary in the UK now, given that we have the confirmed GDP prints. I believe also next week we are getting flash PMIs, if I'm not mistaken. Yep, our chancellor is completely incompetent. Yeah, Starmer doesn't really know what he's doing. I agree. I absolutely agree. Let's go ahead and move on to... What is the next thing we should cover? What is the next thing we should cover? We could go and check out Euro Dollar. I don't mind, right? It's probably the #1 FX pair. We should probably cover it. Man, TradingView is laggy today. This chart is loading so slow. How many times am I going to have to complain about it today? Yeah, look how slowly it's loading the indicators. How about these? Wow, it didn't. Usually range probabilities loads instantly. But this tells me that a lot of people have just logged on to TradingView, and TradingView is throttling people's connections. And more specifically, throttling the calculation loads on a bunch of indicators. Let's see here. Maybe we can get it to work on a 2-hour. Oh no, that was the wrong decision. Oh no, that was the wrong decision, because now it's got to reload the chart so slowly. Again, I wonder what causes this for TradingView, where the charts are loading so slowly and then the indicators load even slower during these peak trading hours, or when suddenly a lot of people log on to TradingView to view charts of something specifically. I find it to be a very, very, very common issue with TradingView. Yeah, I wish there was slightly better optimization. Just during a lot of other times during the week, and during a lot of many other major economic events, no problem with the charts. No problem whatsoever, and no problems with the indicators loading at all. But every now and again, we have problems like this, where even a simple indicator like the trend cycle, which is just a centered moving average, is having issues loading. Yep. Not great. Not great. You know, I genuinely thought after MERS confirmed the story that the Greens were on board to vote for the debt break, that we would see Eurodollar move up another 50 or so pips, that we would break this high or go back to these highs. And I'm kind of curious why we've effectively gone sideways since MERS confirmed the rumors earlier today. Because that's kind of very important information that just got passed to us. Let's see here. Any more news coming down the wire? Nope. Nothing crazy. Nothing crazy. Let's see here. Rachel Reeves signals no change on welfare cuts from the BBC. That doesn't sound too great for everyone on welfare in the UK. And she also says that there will be no more flexibility on debt/borrowing rules in the forthcoming spring statement. Let's go ahead and bring up that article here from the BBC. So, that's her, Rachel Reeves, Chancellor. Let's see here. Some MPs have told BBC that potential changes to payments for disabled people would be unacceptable and they wouldn't wear it. The detail of the plan will be unveiled next week by Work and Pensions Secretary Liz Kendall, and the full scale of spending reductions unveiled by the Chancellor the week after in the spring statement. Let's see here. MPs on the left party have called for wealth taxes rather than welfare cuts, but that is a non-starter with the Chancellor. Oh man, Treasury says no. A Treasury source emphasized the risks of this approach, pointing out borrowing costs have risen to a 30-year high in Germany following MERS's announcement. Chancellor's under great scrutiny ahead of her spring statement against a backdrop of a stagnant economy. Yeah, so all this is pretty bad news. Pretty bad news. Man, again, I would have expected this to continue rising, but the fact that it hasn't has me skeptical now. I don't want to start imagining reasons to be bearish at the moment, given if this stimulus passes, Euro should continue higher, right? A lot of the price forecasts, wow, this indicator is still, TradingView is really struggling to load indicators at the moment. A lot of outlooks put focus on, hey, if this stimulus passes, we should be seeing Eurodollar in the 110s and higher, in the 110 to 115 range. So I'm not totally sure why the reaction to a confirmation that an agreement was made on this is giving some kind of negative reaction. The rumor gave a positive reaction, but then confirmation on the news is giving something somewhat of a negative reaction. We'll see by the end of the day how this plays out. But so far, I'm on the skeptical side, willing to exit these shorts, because I do not want to get caught being short on something that's about to jump, you know, from here to here, potentially 120 pips, right? I want to get out why these trades are still in profit. Now, this trade might not be in profit, but I'm not too concerned because these two are much bigger trades, right? There are two trades here. There's only one trade there. This is net profit. So I'm not totally concerned about this one. Let's see here. What else can we talk about? There's also the Canadian tariffs. So Carney and Trump are supposed to be talking at some point soon, hopefully over the weekend. Oh man, TradingView is still loading quite slow. Not good. Not good, not good at all. Yeah, and check that out. Don't get me wrong, we have seen a fall here on dollar CAD. So the Canadian dollar has been getting stronger against the US dollar here over the last 8 to 10 hours. However, look at that expectation from yesterday. We go ahead and, oh man, I just changed the time frame to a 1 hour chart. This is really slow. This is really bad. Yeah, I'm sorry about the constant complaining, guys, but TradingView usually doesn't behave like this. So yeah, this was from yesterday's stream. We set a positive closing expectation up here, and that is exactly what we got. A very, very, very cool thing to see. However, now we're effectively trading back in this range, so we'll see going forward how things develop. I am curious why the Canadian dollar is getting strong. Let's see here. Canadian wholesale sales month over month came in a little below forecast. Canadian manufacturing sales month over month came in a little below forecast. But these are still improvements over the prior number. So maybe this is being viewed as a earlier sign of positive growth for the Canadian economy. That's how at least I would interpret it. In 10 minutes, we get the University of Michigan sentiment release, which will be important because there are inflation expectations in that survey. The Fed will be looking at those inflation expectations, but I doubt that they will put any form of serious weight behind it. Reason being is in Powell's last speech, he explicitly said that these sentiment surveys on inflation expectations have not been correlated or moving in the same direction as inflation. So some of these surveys on inflation expectations have been moving up while inflation's been going down, and then sometimes inflation's been moving up while these surveys have been going down. So the relationship between the surveys and the inflation data, especially the survey sections on inflation expectations, haven't been totally matching the actual result of CPI. With that in mind, let's go ahead and read this off. We have some more commentary from the Greens in Germany. Green party leader says, we expect to be able to vote on an additional 3 billion euros for Ukraine in the budget committee next Tuesday. And then another Greens party member says, we have not yet done a trial vote with lawmakers. And I wonder exactly what that means. A trial vote with lawmakers. I guess we'll see. This is an interesting reaction for sure. This USD CAD is weakening, I'm guessing, on these wholesale improvement that we got today. Don't get me wrong, it came in quite a bit below expectations, but it's still an improvement from the prior number. We can actually go to the economic calendar, go to today, and untick this box there. Oh, don't tell me they don't. Okay, here's the Canadian data. Thank you. So you can see the Canadian data has improved compared to the last 2 months, January and February. It's moving in the right direction. Motor vehicle sales has fallen. That's not good for the auto sector. It is good for Canadian inflation, though. That is generally good for Canadian inflation. It'll bring down the prices of cars, the less demand there actually is. Unless the reason why this demand is falling is because inflation has been rising the price of cars, increasing the price of cars, right? And then the monthly wholesale trade survey presents monthly estimates for wholesale merchants. And we also see that actually this is probably the highest value we've seen for a long time. This is quite a nice bump here for wholesale. However, how much of this can be contributed to tariff threats, people reacting to tariff threats? So this is not necessarily the Canadian economy, quote unquote, recovering or an early sign of that. This print is very easily likely a transitory bit of information, given new activity from the tariffs. Okay, in about 6 minutes here, we're going to be getting the Michigan consumer expectations and sentiment. Yeah, but you know what? All that analysis still ain't gonna stop the dollar CAD from moving. However, I am still ever so curious. And how fast will the chart live this time? You know what I'll do? I'm gonna save my chart. Alright, cool. And I'm gonna reload the tab here. Okay. Things are still loading pretty slow. Alright. That's better. Again, I am curious why we're now seeing this pullback. Maybe it has something to do with that comment from the one lawmaker or the one member of the Greens party in Germany saying that we have not done a trial vote with lawmakers. Again, I'm not terribly certain. I guess we'll find out later. Yeah, recommended lawmakers to agree to deal. And by lawmakers, are they referring to maybe someone that's not in the Bundestag? This is where maybe having someone who is a native German would be quite helpful. Someone who can explain the political intricacies of German fiscal policy to me and the factions involved. Again, there's only so much research I can do because I got my fingers in a bunch of different pies at the moment. Needless to say, I'm surprised that this thing did not continue higher after MERS confirmed the Greens are on board. We'll head back to, how about we check out Aussie dollar? Oh, come on, AUD USD. Aussie is doing quite well right now. We expected this bounce here yesterday, and net our expectation worked. Let's go ahead and check out things for the week ahead here on Aussie. Wow. It is taking a while for the indicators to load. Usually these indicators are loading close to immediately. Thank you very much. Okay, so next week most of the closes are around here between R0.5 and R1 seasonally. So we'll go ahead and draw a little arrow like that. Maybe we end up having a bullish continuation. So let's look at the low odds and see what percentage of lows are above the central pivot. 20 plus is a good percentage for continuation odds to the upside. And that's not 20, that's 13. It's not great. However, we do have a big sizable percentage right here just below the central pivot. So it's not necessarily what I would call a continuation expectation. But maybe into FOMC we see a pullback, and then post FOMC we see continued relief. That could be one scenario. Past S0.5 and it's a guessing game. So just to clarify, past this S0.5, it's kind of a guessing game as to whether the low is here or here or here based on this historical seasonal data. If we use the ranges, let's go ahead and turn on financial juice. Thank you very much for that. Let's go ahead and launch financial juice.
That's demand effect from fiscal spending. Tariffs may hurt demand and confidence, and policy is now far less restrictive. We need to see further easing in services inflation. Also, less than a minute to go to get the University of Michigan Center prelim.
I just want to check out the daily yield spreads here. Wow, these, trading views. Slow today. How many times am I going to say? Let's make a drinking game. Oh, man.
German Greens Party leader Droge says a fundamental reform of the debt brake remains our goal.
Ooh,
10
yield
seconds.
Spreads are moving a bit on the more negative side here on the Aussie. So I'd be cautious of expecting more upside like this.
57.9, 57.9, lower than the forecast of 63. Current conditions, 63.5, 63.5, lower than the forecast of 64.4. Just seeing some movement on the downside on the S&P 500 off the back of that data there. Expectations, 54.2, 54.2, lower than the forecast of 63. One-year inflation expectations, 4.9%, 4.9%, higher than the forecast of 4.3%. And 5-year inflation expectations, 3.9%, 3.9%, higher than the forecast of 3.4%.
Okay. Higher inflation expectations that are that much higher the Fed's going to be looking at that for sure. Don't get me wrong, there hasn't been a relationship with the movement in inflation expectations and CPI. However, the Fed is going to be taking this into account, considering this is quite a surprise jump higher. Like, this is expecting almost half a percentage point higher in year ahead inflation. No, it's about 0.6% higher in year ahead inflation expectations, and 0.4% higher than the prior. Like, these are pretty high inflation expectations. This will decrease the likelihood, at least initially on the announcement of this release, it's going to decrease the odds of future Fed rate cuts being priced in later on. So we already moved down to expecting 3 25 basis point rate cuts this year from 100. That's why we recently had a strong dollar move. And now we are probably going to begin discounting the odds for one of those 3 25 basis point rate cuts. So I would expect markets to become a bit more hawkish based on that news, especially considering how big of a jump those expectations were. That is quite a big surprise, frankly. So I think it would be hard for the Federal Reserve to ignore that, even if there's been a weak and noisy signal between the survey and the CPI data. The survey's inflation expectations and inflation data. And hopefully that makes sense to everybody. Hopefully that sounds reasonable. Bum. Bum. So I'd expect slightly lower upside expectations until we see more positive yield spreads develop in the short term here. So real quick. Oh, good. The indicators are loading much faster. I'd expect a more range boundedness to downside expectation here on the Aussie. Yeah. Let's go ahead and timestamp this. This is just the nominal expectation. 2025-03-14, 0703. Timestamp your expectations so that you know what you were thinking at a particular point in time. So then when new information comes along, you know where to change your expectations from. This is just a nominal expectation, which is base case given the direct information on the chart. As soon as I have additional information, either about Australian politics, fiscal policy, or new economic data, well, then I can update these expectations further. Speaking of, we can actually check the economic calendar for the week ahead. Search ahead for Australia. RBA Hunter, that's on Monday. New Zealand, Australia, Westpac leading index. All right. Now Westpac is going to make a comment about that. New Zealand GDP, there we go, employment. So employment's on Wednesday. Australian employment. It seems like a more heavy week for New Zealand. And then over next Sunday, we have flash PMIs. Okay. So depending on how the unemployment print comes out on Wednesday is more or less going to dictate, I think, most of the direction for Australia next week. Let's go ahead and check out the consensus expectation on it, and we'll use that as our nominal expectation there on the chart. So here's the employment change. It's expected to continue moving sideways, so we'll view that as a net positive because the RBA then can just continue to hold their policy where it's at. No policy changes required. So no need to wildly change our expectations going out into the future. And then maybe going into the last week of March, we end up seeing the more negative expectations. Yeah, probably into the end of March. Let's go ahead, check out the close odds. And also these close odds, yeah. I wouldn't be surprised to see us close closer to the central pivot this month, unless we get some particularly good news that sends us up to closing close to the prior high of last month. But you can see that's pretty unlikely. So I'd be more in line with setting this kind of expectation given the data that we have. And who knows? Maybe I set a new expectation given new information in the future. It's okay to draw expectations and be wrong on them. It just feels very good when you draw them and you're correct. Just like with USD CAD from yesterday, right? We set really good expectations here, and then on yesterday, we set really good closing expectations here. Oh yeah, and then there was New Zealand dollar, and we know we have a lot of economic data coming out there. That was a decent day trade, but man, would have that been a great long to hold. A nice clean 50 pips so far, huh? Yeah, quite a nice move higher. However, this is close to where we would peak out for the day. You can see past these prices, you start to deal with very, very low probability spaces, right? You see all these 0.9, 0.9, 0.7, 0.7, 0.66, 5, 5. These odds get pretty thin for the day trading way up here. And my rule of thumb is I'm not going to try and trade in areas over here unless I have extra information that's off the chart. And hopefully that sounds reasonable to you guys. Oh, the previous number got revised too. What did it get revised to? Oh, so University of Michigan sentiment fell to the lowest level since November of 2022. And long-run inflation's expectations hit a 32-year high. You can probably see why I was kind of shocked by the surprise. Is that, oh, the Fed, even if they don't like how there's been a noisy relationship between inflation expectations in these surveys and actual CPI data, that because of this kind of jump higher, they are going to have to take a more serious look at it and maybe take a more hawkish stance on inflation. So it'll probably put them more on guard, in my opinion. The Fed should likely be more on guard to inflation expectations driving the direction of inflation, but a lot of those inflation expectations are also tariff-based. I don't know how much of it, percentage-wise, breakdown-wise, component-wise, is tariff-based. I would just be assuming that a good chunk of that increase comes from tariff expectations. So if those tariff expectations don't totally materialize, well, then we're going to end up with lower inflation than what's in the surveys. And then the Fed will be right in, saying, it's very noisy data, right? Yeah, so I wonder what the prior numbers were revised to. I do wonder. Because I don't see the info. But net on the New Zealand, this was a nice little short trade. Would have been nice to hold it for longer, but I was not particularly focused on trading New Zealand dollar bullishly today. Let's go ahead and check out the yield spreads here. Are developing more negatively, so I'm not too keen here, right? And just because the yield spreads get to a more neutral color doesn't mean you can't have good performance out of New Zealand dollar. I mean, for all I know, we're going to go and start trading around the 57.8 spot, about 40 pips higher from here. I'll go ahead and set an alert there. I might be interested in taking a short there off that monthly high, right? If we end up peaking right here for the month, I would be interested in grabbing a short on the New Zealand. I would. Let's go ahead and check out the week ahead for New Zealand dollar. All right, all the indicators are doing their thing. All right, and just like with Australia, we have, I believe, a more bullish view here. So net effectively sideways, closing above the central pivot. Maybe we get more bullish continuation odds here when we check out the low data source on the indicator. No, but we do get even stronger odds of finding a low for the week. So maybe the first move is a bounce down, and then higher, and then into the close. That would be my more nominal expectation. Let's go ahead and view some likely highs. Go ahead and set this to red, timestamp it. All right. Perfect. Oh, wow. Check that out. It's almost like I know what I'm doing. So. Okay. At least I generally do. I like to think I do. Don't we all like to think we're competent? Well, even if you are smart, surprises do happen, especially in markets. So this would be the nominal expectation if we were just looking at historical seasonal data and setting expectations based off those odds. We'll have to see how today closes, but if we close with a really strong bullish candle, I might expect a continuation to occur, more likely than not, up into our 1.5 next week. That, guess what, takes us right into the 57.8 handle, right? So if we're likely to find a top next week, somewhere here between R1 and R2.5, and when we go and look at our odds on the month again, right, using these high odds for range probabilities, that brought up the peak in the probability distribution right here. Extend that out, right? Then we go back to a lower time frame. See, that lines up right with our expectation, where we, based on historical seasonal data at least, see where the top could come. Looking at the ranges here for next week, I would feel comfortable expecting slightly higher prices, honestly. So the, getting close to maybe trading just at or under, even a bit above, within our range effectively is what I'm trying to point out of the 58 handle here. Which gives us a weaker case for closing next week at exactly this price, because the higher up you go, the more volatility you need to close down lower. But you can see adjusting the top up here is also reasonable. We have pretty good odds there. They are lower, but once you do cross that R1.5, you're spreading this 27-ish% probability historical seasonal odds between R1.5 and R2.5. Let's go ahead and use the closing odds one more time to get an idea of if there's a better place to set our expectation of where we'll end up closing next week. Yeah, there's pretty decent odds that we end up doing something like that, right? 13 and 9, or something along these lines. Let's go with nominal expectation there. So net, that looks quite good for the week ahead on New Zealand. Let's check out the economic calendar here. So on Wednesday, we have GDP. And the forecast is 0.4%. The prior was -1. So if we do see an improvement in GDP by Wednesday, I would expect us reasonably to hit the upper part of the 57 handle here. That does make sense to me. I'd say this expectation seems reasonable given the information that we have from the indicators and from just consensus views on the economic events that we have. Of course, if we get anything over the weekend as far as news out of New Zealand, either from fiscal policy or central bank policy, or leaks rather, we'll always try and stay on top of that in our group's research threads. And by research, I mean hop into the Discord, right? So come in. Here's the central banks channel. And here's the geopolitics channel. And a bunch of threads on a bunch of different economic events, geopolitical events, wars, conflicts, elections. Stuff to stay up to date about. And then we have the first part, a bunch of outlooks got posted yesterday from many different institutions. Go ahead, click on the links, go to the respective publications website and take a look. This one from Wells Fargo, March flashlight for the FOMC blackout period on hold through the policy fog, I thought was a pretty good read. However, some of the information in that might need to now be adjusted, given we have this new information here from the Michigan Sentiment Survey on inflation expectations being so freaking high, right? A 32-year top. Okay. All's well? Yep, all's well so far. Julio. Ah, man. So guys, go ahead and give me some feedback. Tell me how I've done so far. Hopefully the commentary has been smooth going here into the weekend. I really look forward to tomorrow's stream, which is going to be a PineScript programming hour stream. I really do look forward to that one, because I get to just relax, and usually the streams, they can go on for more than an hour. But we try to aim to continue developing some of the open source indicators that I build and present here on the stream during live streams. And for those who want to learn more about how to build indicators, they can watch the streams and actually get access to one-on-ones with me in this PineScript mentorship offer here, also on WAP. You can actually get access to it if you go to the pinned comment and click on the link in there. You can also get access to the Discord here by going to Plan the Profit community. And then, of course, all the indicators that we've been doing analysis with so far today, just go to Boss Trading Group Plus Indicators, where you'll get access to the trading group, where we try and take action on all the research and indicators we do here autonomously on our own. Of course, everyone is doing their own thing. Everyone is just sharing notes and research with each other, but ultimately everybody in the group is responsible for taking their own trades, right? So this is not a signals group. There's a bit more effort that goes into it, but there's also more one-on-one help. So if you need help with learning how to use one of these indicators in more depth, I'll be there for you. Plus, you'll have plenty of examples. I think I have a thread now with like 3 years of chart history and analysis and trades. There's a few threads that you can go through. Some very, very good information. The S&P is doing okay. It's not doing fantastically, but it's doing okay. NASDAQ is doing a bit better. It's up 1%. Japan is doing really good today. Wow. Japan is doing well. I guess we might have had new information on the Shunto wages come out, but I haven't heard yet. Let's see here. If I do an X search for Shunto, go and search by latest. No, I just see a bunch of K-pop stuff. I see a bunch of K-pop and One Piece stuff. Oh, man. Let's see here. Anything else? The Economist sees slowing growth and multiple rate cuts ahead. Okay, good for you. Let's see here. Any major news that's come down the wire here? EU countries extend sanctions against Russia for 6 months? Really? Why for 6 months? I mean, maybe they'll say, oh, well, you know, we're extending it for 6 months, but we'll take them away if you actually come to a good peace negotiation, right? We'll see. But that's not going to help in the negotiations, re-extending the sanctions, unless they were just about to expire, that is. German stocks rise, the euro rallies as German parties agree on historic debt deal. And they're right in the headlines, right? This is when we got the news of the Greens willing to partake and agree to the debt break amendment here. So this is also the French stock market, the CAC, did well. And then this is the DAX, this is the German stock market, which has done better than the other two European equities here, you know, the Euro 50 and the CAC. It's also doing better than the UK. So of the European equity markets, equity indices, Germany's is doing the best because they just got their stimulus money printer go brr moment, right? Let's see. Da, 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 da. We'll see if that loads. Wow. Uh-oh, my file explorer isn't responding. The wages rises, they are under the 6% forecast. Oh no, there was. If we go to USD I was listening to Financial Juice back here when it actually turned out, oh, Shunto wages came in higher than expected. And we did not hit this expectation going into the end of the week. This was a good expectation up until this point right here. So this is an example of a missed expectation for the week so far. Ah, man. Can I? Yeah, there we go. I had to unfreeze my file explorer there for a sec. That kind of sucked. So yeah, one missed trading expectation, but so far on path for the expectation next week, probably. Yep. So wages in Japan are increasing, and we'll get more information on the Shunto stuff over the weekend, I believe, which should keep the Bank of Japan hawkish and keep the yen strong, continuing to unwind the carry trade that everyone, people with billions and billions of dollars do, right? Because you really only carry trade if you have a lot of money levered up and you're just wanting to collect that carry. If you got, 5, 6, or even 7 figures, I mean, maybe if you leveraged a lot, 6 or 7 figures could work, but that really depends on how much income you want and the opportunity cost of doing a carry trade with only that much money. You really want to do carry trades with a bit more money than, $100,000, I mean, you can do it. And if you do it right, it'll work, right? But, you want to make sure you do it right. And because typically you got to put a lot of leverage on those things. So you gotta be smart about it. I mean, that goes for most things in life, right? If you're not smart about life, well, sometimes honestly, sometimes being dumb is the preferable option. Sometimes ignorance truly is bliss. And maybe that's one of the smartest things I could say. Context. That's what a lot of life is, right? And so far, so good. Everything is moving along. Again, I see a bigger risk here on the CAD. I'll mention this because this is probably the most aggressive expectation that I set over the last couple of streams here. This dollar CAD expectation is based on the relationship between Carney and Trump continuing to sour. I am not totally sure if that will happen in the phone call. I think they'll have a civil phone call sometime over the weekend, sometime over the next 2 or 3 days, I think Trump and Carney will have a civil discussion. If they don't, for whatever reason, or Trump feels like Carney is flip-flopping, appearing nice to Trump, and then going to Canadians and saying very combative things about America to Canadians, then that's just going to make Trump angrier. It's going to increase the probability that Trump actually does put on some harsher tariffs for Canada. Again, Trump's goal, no joke, is to make Canada a state. Trump, I bet Trump will definitely talk to Carney about how he would feel to make Canada the next, 51st state of the United States. Trump will bring that up. Trump's absolutely going to say, hey, Carney, are you ready to make Canada a state? In reality, if Canada were to join the United States, it would probably get split into about 10 different states. You could argue that each province would become its own state, and that's a reasonable place to start off with if we're actually along that route. I don't think Canada is ready to join the United States right now, and I don't think the United States is also ready for Canada to join. The Liberals in Canada, a lot of the Liberal population in Canada still has a lot of power. But what I've actually come to learn recently is that there is fraud going on in Canadian polling, making the Liberals look way more attractive than they actually are. And I posted this actually in the Canadian election thread, so if you want information about specifically what I'm talking about, go ahead and go to the Canadian federal election thread. You go to Research Forum here in the Discord, and then 45th Canadian federal election, and then scroll up from here. And you can see that there's a bunch of drama with Canadian pollsters, right? Canadian pollsters are fighting over X. And they are talking mad shit about each other and how inaccurate a lot of the Liberal pollsters have been, not just recently, but throughout their whole careers. And how they are overestimating the Liberals and giving, and effectively, if you remember the Kamala Harris boost that occurred in the last 2 weeks before the United States election occurred last November, this is kind of the same thing that happened apparently with Carney. There was a massive polling boost from a lot of these pollsters who are wildly incorrect consistently. They are consistently incorrect. And these are the people who are giving the Liberals in Canada their polling boost. So I've become, after looking at that thread, a lot more skeptical of this rise in Liberal support. And I am now falling back on the expectation that the Conservative Party will win the next election. Because we had the exact same kind of fraud in polling and manipulation in polling occur in the last several elections here in the United States. So I'm looking at that information over in Canada and I'm saying, okay, I relate with that. That makes sense to me. Also, it's a lot easier to point to someone who's had a career of not getting forecasts done, polling forecasts done ethically or correctly or accurately, and then compare that to the results of someone who does do accurate polling in Canada, and ethically and accurately, right? And see that the guy who's doing things right thinks the Conservatives are going to win, the guy who has a really good track record for a long, long time, and then the guys who have a bad track record are expecting the Liberals to win. So it's kind of like, well, if we do the experiment that I usually like to do, for example, on Hashdive, which is a website that allows you to break down based on the poly market you want. Oh, they now have an official login. That's great. Maybe we can check out Bitcoin. Cool. Dark mode. Analyze a market. That's just the featured market. Home. Yep. Let's go ahead and search up something like... do they have the debt break here for Germany? No. How about... Oh, right there. Russia x Ukraine ceasefire in 2025. Let's go ahead and check out the odds here. So 73.5% of people in poly market, that is 2,800 people, have voted yes, versus 26% of people on this market think no, which is 5,300. So there's a lot more people weighing a lot more on yes. And if we scroll down here, this is the best part of this. Oh, this app encountered an error. The original error message is redacted to prevent data leaks. Uh-oh. Uh-oh. Let's try reloading. Because one of the best parts is this score comparison. Maybe it's broken temporarily. Yeah, the score comparison is broken. That sucks. It'd be nice to be able to check out when that gets fixed. The score comparison lets you see how frequently, by a weighted average, how accurate the people who vote yes are versus the accuracy of the people who vote no. So what I'm pointing out with the Canadian pollsters is it's like if the people who vote no here, who are very, very frequently, let's just argue for the sake of the point, let's say that they're wrong a lot, and then the guys who vote yes are right a lot. It's not only that the yes price has a 73% chance of winning, it's also that the guys who have a history of winning are also voting yes. Because sometimes you can have people, for example, who have the lower probability event, right? Remember Trump during 2016? So many people said, oh, he's probably not going to win. But if you looked at all of the pollsters in 2016 who had a really good track record of calling who was going to win and followed them instead of looking at the majority of the pollsters, just followed the quality pollsters, most of them, the super majority of them, thought Trump was going to win. And while they're in the minority, they had a higher quality forecast. So when it comes down to the Canadian pollsters, Canada's polls are kind of in a similar situation, where there's a lot of pollsters who are saying that the Liberals are going to do so well, but their polls are just crap. Look who just posted on X. Speak of the devil. Jagmeet. I want to congratulate Prime Minister Trudeau on his time in office and wish him well. He served our country through tumultuous times. Whatever disagreements we have had, his love for Canada is always evident. Say that to the truckers, right? Say that to everyone who had to go through his rule during COVID, man. Yeah. No. Public service is a great privilege, but can require a sacrifice, especially for families. I know PM Trudeau has always been there for his kids, and I hope, as he steps away from politics, he gets to enjoy more time just being a dad. I would prefer that too. Trudeau stepping away from politics. So many people would truly enjoy that. Did you see Trudeau was crying or something during a presser, saying, oh, I'm so glad to, be your premier and all the good stuff. I'm like, imagine if Gavin Newsom became U.S. president. You would effectively have Justin Trudeau of the United States if Gavin Newsom became president. That's effectively what the United States would become Canada if Gavin Newsom became president. But thank God the man is so unpopular and unlikable and has such a terrible history. Man, if he actually runs and becomes the nominee for the Democrats, it would be such an easy sweep. It would be, he might do a little better than Kamala, but that would be my expectation. He might do a little better in some areas than Kamala did. And Kamala did not improve in any district. She got no votes greater than what Biden got in 2020 in any voting district in the US. And for those who aren't familiar with US districts, you have the country of the United States. It's a hierarchy. You have the country of the United States that includes all the individual states. There's 50 states. And then inside each state is cities bounded by districts. So there were no districts, any individual city that voted for Kamala Harris more than what Joe Biden was voted for in 2020. It was a total sweep. She was the worst candidate they could have picked. Total sweep. And to think that they would run Newsom, he might do a little better because some people might think of him as charismatic, but he's had so much shit pulled off on him. It's, the guy's hopeless. He's doing podcasts now with heads of right-wing think tanks trying to get input on how to improve the Democratic Party, and they're just going onto his podcast to make fun of him. I actually remember watching that with the guys over on WAP not too long ago. I didn't leave the WAP live stream, so it's not full screen. Okay. Let's see here. Do we have any more new posts from any of the world leaders here? No. We got some. The French socialists are posting some stuff. Looks like the press secretary was on Fox this morning and said some stuff, so let's check that out real quick. What did the press secretary say?
Our special envoy, Steve Witkoff, our national security advisor, Mike Waltz, Secretary of State Rubio, and the president himself have been working diligently to end this conflict in the Middle East and to ensure that all of the hostages can return home. I was in the Oval Office a couple of weeks ago with the president when he met with 8 recently released hostages, and they said to the president, every single one of them, they would not be alive if not for President Trump. So this administration will continue to work hard to release all of
And let's put the
Democrats last week were gambling that President Trump couldn't secure the votes, and they learned don't bet against Donald Trump. President Trump and Speaker Johnson did a tremendous job getting this continuing resolution across the finish line in the House, and now we expect everyone in the Senate to get on board. This is a good, clean, fair CR for the American people to keep the federal government business open and operating, so we can pass a balanced budget and a good budget reconciliation package later this year. And so we're pleased with Chuck Schumer, and we hope every Democrat will get on board and do what's right for the American public.
Speaking of what Leavitt has said, it just came down the wire here on Financial Juice that there is nothing on Trump's schedule to talk with Putin today, but Trump's schedule could change. So it's showing inclination that Trump and Putin are trying to get a phone call started imminently. I'll just go ahead and make a call here for, remember to like and subscribe. Oh man, we did another hour for the week ahead stream. I know I did ask for chart requests for anything you guys wanted me to look at for the week ahead here. We'll follow up with these expectations going into the week ahead and beyond. But now would be the last call for chart requests for the week ahead if you had any. Because I'm going to go ahead and do USD CAD here. And then we'll call it a stream. How about that? So yeah, remember to like, subscribe, and check out the trading group if you're interested in all this stuff. $100 a month is pretty damn good value here. And then we have, of course, the free side of the Discord where all the trade research goes on. And then tomorrow we have the PineScript mentorship and the PineScript programming hour stream. Man, I do look forward to that every week. So we have a more sideways skewed week, it seems, on a closing basis. Parliament comes back here. So this is the nominal expectation we're setting. Let's call that blue. Let's go ahead and set a low expectation. Let's find out where the likely low ends up next week. Wow, pretty good chances of the low coming in right around here. That seems like close to 60% of the lows are around here. It's not exactly 60%. But it seems pretty close. And if we go and now look at the highs, probably some pretty decent highs. Yes. So maybe we do end up with something like this next week. Let's go with that. And let's timestamp our nominal expectations here. 0314, 0749. Of course, these are just the nominal expectations using historical seasonal odds from this indicator. Again, nothing wrong with that so long you understand the expectations and assumptions that go into the data that you're analyzing. Because if you don't understand the assumptions that go into the data you're using to make decisions with, when new information comes your way, you need to be able to understand if that new information is something that you need to seriously take into account that isn't taken into account with, for example, the data we just used here, or if it is similar data that kind of conforms, confirms, denies, goes against data that we're currently using, right? So seasonal data against seasonal data. However, stuff like geopolitical events, fiscal policy announcements, that sort of stuff. For the USD CAD scenario, that would be how well does the Trump Carney call go, if it even occurs over the weekend. If Trump actually denies taking the phone call, I'd probably view that as a bad start to the relationship. And that's actually not a zero probability of that occurring, considering Carney right now has just been appointed as prime minister, and if the trade war with Canada escalates fast enough, it could throw a lot of people off from voting for the Liberals. So this would be the nominal expectation. Let's go ahead and look at the ranges here. See if we can find some matchup, and it looks like we do. We have a peak in our low and a peak in our high. And if we toggle these ones off, oh, look, there's a peak in our close right around there. So this would be, I think, a decent nominal expectation going into the week ahead here for USD CAD, given the information that we have available to us. So nothing terribly crazy here. And we've had some pullback. Big top wick here now on the euro dollar side. So I'm glad that I've continued to hold on to this trade here. And this trade here, because guess what? Now I'm not taking a loss on this trade, and I'm not losing a ton of money by, only taking 10 pips profit or something here. I'm getting that back. And if you didn't get a short here, don't worry. Probably most people didn't either. In fact, if I wasn't already short and had the expectations that I had about all this stuff going on, if I didn't have such a strong bearish bias, and I was even saying earlier on in the stream, I need to be a little bit more open-minded, considering MERS confirmed that they're going to try and work something out. But the fact that this is now pulled back, this could, like I said, still just be a technical move. It could just be a sell-off, some people taking profit. And then we see a continuation of the euro going into the next week. That is totally an option. The stimulus is expected to be voted on here on the 18th, so it's only 2 trading days away. 2.5 trading days away. So it's not that far away here. So technically, in my mind, I'm still on the back foot, even though there's been a bit of relief here. So I'll have to assess what to do with these trades over the weekend on my own time for my own risk tolerance. Maybe I take this trade off at a small loss and reduce the position sizes on these, just in case we continue to see price appreciate on the euro side here of this pair, as the debt break amendment is prepared to be passed. And I think that sounds reasonable. I think that sounds fairly reasonable. Alrighty, you guys. I've had a pretty good day so far. I look forward to having a good rest of my day. And I sure hope you guys have a good rest of your day as well. So, I will see you all in a bit, and in the Discord, and in the trading group as well. Have a good day, everybody.